Anticipate. Don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact.
I don't give a fuck.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Welcome to the most copied, the most imitated channel for TA on YouTube. Guys, you've been watching this channel in 2024, and welcome to all the new subs. You have seen some extremely accurate TA play out because we are tracking to the GFC cycle. So far, so good. The summer top and drop, where I gave you a 10.5% drop, which hit our target to the penny, 51.20 on the S&P futures. YouTube told you everything was falling apart, how to trade the next leg down. I told you it's rallying back up, making new all-time highs. I predicted the 50 basis point Fed cut months ago based on the GFC cycle. And then what happened? We got 50 basis points the day of the cut, September 18th last week. We rallied up a little bit, close to the lows, and then had the big rally the next day, almost a 2% move in the S&P, 500 plus points on the Dow. And now we're just kind of levitating. So where are we now in the cycle? That's what I want to show you guys. I want to show you something nobody else on YouTube is going to show you in the charts today. But before we do that, let's talk about the health and welfare of the economy, because Powell did his press conference afterwards, and he said some things. He said the economy is very strong. He said unemployment is low. And when he says economy is strong, I don't know what he's looking at exactly. I'm assuming he's looking at the GDP, which was revised to 3%. Now, people have been telling me, Brendan, this thing's going to keep running up. It's going to run up into 25, 26, and because the GDP is too strong. Financial conditions are too loose. Well, do you guys know what the GDP was in the GFC cycle? It was 2.9%. Right now, it's 3%. It was 2.9% in the GFC cycle. That doesn't matter. That's an estimate. And if you haven't figured that out already, the government cooks the books. It cooks the numbers. But what was the media saying about this 50 basis point hike, guys? Lee, roll clip one.
Welcome back. Now we'll look at where markets ended the week of new record highs. This after the Federal Reserve's major 50 basis point interest rate cut, the first cut in more than 4 years, and the kind of cut that we only have seen in times of national catastrophes. So there are now questions about the real strength of the economy given these drastic measures.
The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace.
I guess it shows the economy is very bad to cut it by that much. Assuming they're not just playing politics, the economy would be very bad, or they're playing politics, one or the other. But it was a big cut.
Joining me now is Strategist Chairman and CEO Jason Trenner. Jason, good to see you. Thanks so much for being here.
Good to see
with
you.
us this weekend. Your
My pleasure.
reaction to a 50 basis point cut by the Fed this week?
Well, I think, as President Trump was saying, there seems to be something incongruous, right, with Chairman Powell saying the economy is just fine and then cutting 50 basis points, which, as you pointed out, really only happens in emergencies. Sometimes you can, sometimes you can tighten by 50 basis points at the start of a cycle, but as we did a couple of years ago. But cutting by 50 basis points almost always means trouble. And it does not seem consistent with the fact that stock prices were close to highs before the decision. Bond yields were low. Dollar is weakening. Gold is stronger. None of those things are really consistent with a need to cut 50 basis points. I do wonder whether, in some ways, it was politically motivated.
Yeah. I mean, look, you can't have it both ways. You can't say, oh, the economy's in great shape and then cut by a massive 50 basis points and promise another 50 basis point cut by the end of the year. Jason, when would you expect?
Yes, the 50 basis points took a lot of people by surprise, including a lot of people on YouTube, for a couple of reasons. A lot of people were saying this mantra of 25 basis point cut means that we have a healthy economy, a strong economy, and we're just normalizing. 50 basis point cut means the Fed knows something that we don't know. Well, let me tell you something, everybody. I'm 45 years old, about to have my birthday very soon. And in my lifetime, the Fed has cut 50 basis points 3 times. They did this in the pandemic, 50 basis point cut, the market fell 38%. They did this in the GFC cycle, 50 basis point cut for the first cut, the market fell 57%. They did the 50 basis point first cut in the dot-com cycle where the S&P fell perfectly to the Dow retracement of 50%, and the NASDAQ, like a redheaded stepchild, got taken out to the woodshed and beaten and lost 82%. This cycle will be no different. This cut was predicted by the cycle because of how we're tracking to it. And guys, you have to understand, the government cooks the books. The job revisions numbers. Do you remember this? They said that we had created over 1 million jobs. In actuality, this is just the first revision down, the minus 818,000. I listened to a couple of Fed officials who went through it, former Fed officials who went through it. They said the next revision down, when they get into the data and break it out, is going to be about 915,000. And why is that significant in this really strong economy that Powell's talking about? Lee, roll clip 2.
And it's interesting, Bloomberg's Cameron Kreis has noted that in 3 decades of Bloomberg data, there has never been a cumulative 1-year downward revision of 500,000 jobs or more without a recession. What do these revisions really say to you at the end of the day?
So we would expect the numbers to be off. This off is pretty dramatic. It's the largest that we've seen in 15, 16 years. It's about 1.5 times larger than any other downward revision that we've seen. So it's a pretty big deal.
Never once in 30 plus years of Bloomberg data have we had job revisions above 500K and not had a recession. Guys, I say this every video, but we get new subs every video. Every single recessionary indicator with 100% accuracy has already triggered. Understand that. The most important being the unemployment. The Fed itself, Powell raised the unemployment projections to 4.4%. That is a full 1% off the low of 3.4%, and he raised it to get there by the end of this year. Now, we already have the 60 basis point rule. We have the 50 basis point rule, the SOM rule. All of those things have triggered. All of those have 100% guaranteed a recession, captured all 12 recessions back to World War II. But once the 1% rule triggers, that's the final straw that breaks the camel's back, because that has an immaculate track record as well. And even Elizabeth Warren Pocahontas in the Senate knows this. I know you guys have seen this clip, but I really like this clip because, it's funny. Trading economics can bring strange bedfellows, no pun intended. But who would ever think that I would agree with Elizabeth Warren on anything? Lee, roll clip 3.
Since the end of World War II, there have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year, exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
It's not as black and white as very,
Just
very
looking
infrequent.
at the numbers, it actually is pretty black
Alan
and white.
Blinder's written a book on this.
There have been 12 times that we've seen a 1 point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
So many of you are asking, how are they keeping the market afloat? How? Well, understand, it's really just goosing the economy. All you have to do is juice the economy. The market and the economy are two separate things. You guys know we're printing $1 trillion added to the debt every 90 days. And you won't believe these metrics. I didn't believe these metrics till I heard them and went back and researched it. Listen to this. Lee, roll clip 4.
we should point out that not only are they going to add about $8 trillion to the debt, but also run down Treasury's cash balance by another $1 trillion. So it's really $9 trillion of overspending, and that's about a quarter of the entire national debt when these people leave office in January. So essentially, they are responsible for 25% of the nation's debt, despite having only been there for 4 years. That's pretty remarkable. But on top of that, we need to really put in perspective, I think, just how bad the fiscal situation is here, and the fact that it's not a question of revenue like that gentleman was just saying. We are taking in plenty of revenue. The issue is too much spending. We just got the monthly Treasury statement for August. It was the worst deficit for any August we have ever had in the history of this country. About 55 cents of every dollar the government spent had to be borrowed. We have spent now over $1 trillion just in interest on the debt, not paying it down a dime, just the interest. We've never done that before in any fiscal year, and we still have another month to go before this fiscal year ends.
The Biden-Harris administration, by the end of this administration here coming in 2025 in January, by the end of it, will have been responsible for 25% of the entire debt of the U.S. since its founding as a country. Basically 250 years, 1776, okay? They're responsible for 25% of all the national debt in a 4-year time period. How crazy is that? Last month alone, we borrowed 55 cents of every dollar we spent. And they want to call this a strong economy. Understand, when you talk about GDP, when Powell talks about the economy, the GDP is an estimate. Right now, GDI is a much better measure of how to gauge a country's strength as far as the economy. And the GFC, we were $300 billion divergent from the GDP, according to the GDI, as gross domestic income. Right now, we're $600 billion divergent from the GDP. Again, the government cooks all of the numbers. Lee, throw up the household savings. Check out this chart. Household savings are the lowest they have been since the GFC. They are negative. Nobody has any money. The average family, according to the latest survey, 50% of the country does not have $1,000 for an emergency. Half the country. Again, remember, Powell has a dual mandate. The Fed has a dual mandate. Do you remember what that mandate is? Keep the top 10% as wealthy as possible, and do that by keeping the S&P as high as possible. This is what the dual mandate is of the Fed, and the new mantra on Bloomberg and the business news, you guys are going to see it over and over again. Powell is cutting rates into a bullish economy. So our base case is bullish. I heard this at least a half dozen times in the last 48 hours. The base case is bullish because he's cutting rates into a bullish economy. Again, he cut rate, not Powell, but Bernanke cut rates 50 basis points, the first cut in the GFC cycle, and GDP was just about 3%. It was 2.9%. These things repeat over and over. Most people on YouTube don't understand the euphoric bubble cycles. That's why they call the crashes way too early, or they just keep saying higher, 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 and they miss all these massive retracements, right? You have to understand these cycles leave fingerprints. They don't have to play out to the exact T. But so far, this one, guys, I think all of you will admit, go back and look at the comments in the last couple of videos. It's playing out absolutely beautifully. So without further ado, Lee, let's start the show. All right, guys, I'm going to show you something that nobody else I have seen on YouTube is even looking at this. This is something I track closely, a natural cycle. I think you guys are really going to enjoy this. By the way, if you want to hang out with an awesome community, with my staff, with myself, I'm always on my Discord. You can click the join button right on YouTube. Try out the Discord, see if you like it, because these are tumultuous times and very fun times to be trading in. You can message Lee in our Telegram that's in the video description if you have any questions about how to join. All right, guys, let's check this out. So let's look at the ES to start with. I want to show you what I'm looking at here. Here's my side-by-side with the 2007 cycle and the current cycle. So let's look at this. Need my brush. Remember all the similarities. Fed funds in 2007, they were 5.25 before the 50 basis point cut. Fed funds in 2024, they were 5.25 before the 50 basis point cut. We're looking at S&P futures. When did S&P futures top in 2007? July 16th. When did they top in 2024? July 16th. And then, July 16th right here. And then we did our retracements, okay? We did our retracements, rallied back up, made new all-time highs in both situations right now. But a lot of people are asking me a lot of questions on the Discord about what's my invalidation point of the pattern? How high can it really go? I've showed you my targets on the S&P 5,900 to 6,100, sticking with those targets. But I want to show you the duration of how quickly this could happen. This is the part you need to pay attention to. Check this out. So from the actual top, July 16th, this actually, there was a new moon cycle that kicked off July 14th on a Saturday. So you have to add 2 days to this, okay? The moon actually was on July 14th. The reason that's important is it took 3 new moon cycles, and then we topped on the exact day of the third new moon. 89 days, okay? Pay attention to that number. 89 days between new moons. So you add 2 to this, you get your 89. And then look at the bottom from your base of your retracement low in 2007 to your actual all-time high before you started your 57% downward move, which was October 11th for your high. It was roughly 56 days, okay? So 89 days from the first new moon to the third new moon, and 56 days from the peak of the low over to your new all-time high. What about over here? So the new moon over here is actually on Friday the 5th. You see this, the blue circle here in 2024? You put this gold line here. Look at the distance. The distance from, obviously, the first new moon to the third new moon is October 2nd, 89 days. It's roughly a 29.5 day lunar cycle. Okay, so 89 days, 89 days. That's the same. What about the base for the retracement? Well, look at the base. If we were to top on the S&P on October 2nd, 58 days from the retracement low. 58 days, 56 days. Pretty close. The key dates I'm looking at in October is October 2nd, October 11th, because that is the actual top from the previous 2007, and then October 17th, because that's a near eclipse as well. But October 2nd is special. I just kind of buried the lead there. October 2nd is special. It's not only a new moon, it's a ring of fire eclipse. It's the last solar eclipse for the year, and it happens October 2nd. And you may say, well, who cares about that? It depends if you believe the market adheres to natural law and natural cycles, as Charles Dow did, as W.D. Gann did. I do. These are potential pivot points in the market, and you can see it, how they mark the tops in the market. Let me get rid of all of these arrows. Just look at this. First new moon, 89 days later, third new moon. You have your peak. You ran up for a couple of days, hit your peak. And of course, the peak of the exact day over here, first new moon. If we get to October 2nd and make a top, third new moon, which is also a ring of fire eclipse, giving you the exact same 89-day cycle, basically from peak to peak. Okay. Something you should pay attention to that nobody is going to show you. Let me show you this, what it looks like here on the Dow. How important are eclipse cycles particularly? And when you're looking at these elegant bubble cycles, they play some key roles. It's really interesting to see how often they play key roles. A lot of people who have been watching this channel have already seen some of this TA. I made a whole video on eclipse cycles. But here's your lunar eclipse, October 31st, 2023. Look how significant this was. That marked the actual bottom, right? The bottom to the day after a 9.5%, almost 10% decline in the Dow, right? The bottom to the day, lunar eclipse on Halloween, total solar eclipse. So let's check this out. So when you look at this, look at the run up, into the solar eclipse, 24.5% move, 157 days. And once you got the eclipse, you got this topping pattern, the double top that formed. You then got a 7% drawdown after that solar eclipse. Okay. And now the next eclipse, October 2nd, is once again a solar eclipse, and it matches the Fibonacci pivot of 89 days, 3 new moon lunar cycles. So it's a really key date to watch. I don't know if that's going to be the pivot, but again, when is my invalidation point? When we stop tracking to the cycle. so far, everything down to the rate hike or the rate cut on September 18th, the rally that occurred, it occurred the day of back in 2007. We got it the next day here in 2024. But so far, everything has been tracking so close. I don't think you can fade this. I don't think you can ignore this. You need to pay attention to October 2nd, especially if we start rallying up and get to my targets of 5,900 to 6,100 between now and then. And that's coming up very, very soon. It matches all of the Fibonacci numbers, 89 days, 55 days, dual Fibonacci pivots here. But also check this out. If we look at this from this perspective, let me measure this from the actual top before the retracement to October 2nd. Look at that, 55 bars. Okay, remember Fibonacci sequences can be in bars and days. There's a lot of pivot points lining up on October 2nd, including this solar event. So pay attention to October 2nd. Let's go ahead and move forward. So let's do some, we didn't do the NASDAQ. Let's do the NASDAQ real quick. Again, 2007 on the left, 2024 on the right. And you can see we got our big rally here in the NASDAQ, again, the day after the Fed cut instead of the day of the Fed cut. But this is what the NASDAQ did afterwards. Remember, these moves were substantial. The NASDAQ off of its low, off of its retracement low, went up 24%. Where's it at right now? Right now, it's at 16%. If it was to go up 24% once again, you'd be right around here, 21.5, 21.6, okay? Can it do that? Something I want to point out, people are asking me if everything would top with the S&P. Again, I have one fractal pattern, right? The GFC cycle. But the way it played out in the GFC cycle here on the left, the NASDAQ did not top until November 1st. So how would this correlate with Bitcoin? Bitcoin did not exist, but it tracks to the NASDAQ. So what you could have is a situation where you have the S&P top, the Dow top, maybe on that October 2nd date, which is a very possible candidate, okay? October 2nd. They both could top, and you could have the NASDAQ continue to run up for another 2 or 3 weeks afterwards, like it did in the GFC cycle. I don't know. I want to see this happen in steps, right? What is the NASDAQ doing when we get to October 2nd? Is the S&P topping around that time period? Does it run up a couple days more and pull back down, start making a double top? Look at these things as points of confluence. But what I do know is in GFC, you ran up till November 1st. That was your top, November 1st. It was not October 11th like the S&P. So that's something to consider, guys, which means Bitcoin, NASDAQ could have more to run after the S&P tops. Normally, it's the other way around. Back in 2021, NASDAQ, Bitcoin, Russell all topped November 2021. S&P ran up to January 3rd, 2022. So you want to watch and see how this plays out. Let's get rid of these. Let's look at this since we're on the Dow. Let's look at the Dow. Where's our points that we're tracking here on the Dow? We can look at the Dow from the July 18th, 2024 top. Pull this down. Look right where you're hung up at, 42,524, current price 42,511 in Dow futures. And what is this pattern, ladies and gentlemen? This pattern is a W pattern. Do you see this? By the way, I'll be recording my W&M education series starting this week. Actually, I put the first module out there on the Discord. It'll be on the Discord, eventually on the website when that launches. So guys, there'll be some education there. If you are interested in watching and learning my style of trading, I will be teaching it in modules available. Okay. So let's go ahead and look 50. So right now, 42,524, you're hung up here. So is this not bullish enough, right? If it breaks out to the upside, 43,607 is my target. If it pulls back down, doesn't care about the October 2nd date, or maybe that's the pivot for the low, right? Then maybe it moves up, just like we had that pivot down here for the lunar eclipse, right? So we'll see how this pans out. Maybe we pull back first, then go up. We do know that you have that 23-day, 3-week timeline after the Fed rate cut to run, but October 2nd is going to be key. So let's watch and see what happens here. 42,524 is key resistance. Your next level up is 43,607. If you do fall back, you want to hold 41,672. The ceiling right here. You see this? The ceiling with these candles. So if you did fall back, you want to try to hold that. And maybe this is what you get. Maybe you get a 3-wave topping pattern right here. I don't know. We could see what happens tomorrow if we start moving up in the market, okay, as we digest this rate cut. If we look at the S&P futures here, you can see this is nothing more than a large ABC going all the way back from the pandemic. And of course, that target for the ABC was 61.36, and we're at 57.73. Could we be topping up here, finding resistance? We could be. We'll see what happens. Remember, we got the 5,800, right? We got the 5,800. When we look at the S&P here on our smaller ABC pattern with our symmetrical waves, 15.25%. By the way, the same wave back in 2007 off the retracement low up to the new all-time high. I have this taking us up to that 5877. 5877. I'm calling it 5900, rounding up to 6100. Okay. But we got to 5800 already. So we want to watch this little gap. This is a little gap here before the key resistance level, 5877. And that could just happen this week. You could just bounce up 50, 75 points, get up to this level, and then start making your top, or get a spike top where you get one candle just like this, and then all of a sudden a series of red candles on the way down. So we want to watch these levels closely to see how it plays out. Looking at the ES here on the daily, again, when I'm looking at my Fibonacci, pulling my Fibonacci down, there's our rate cut September 18th here in the green. You closed almost on the low, and then you rallied up the next day, and you're just kind of going sideways, guys. And again, look how close our next level target is. 5884, again, 5900 for easy math, 6100, right? So this could be, anything can happen this week. You could pull down some here, start making a little baby W come up, and this could be your top right here at 5900 with all that confluence I just gave you for 5900. So you want to watch this range closely. Where does this start to get in trouble? If you start falling below 5650, right here, 5650. Why? Because this is your base. You see this? You have a lot of candles around this 5650. And if you start losing this, you come down, come up, come back down, then, we might not be tracking to finish this off with these price points. So you want to pay attention to this, okay? Right now, you're literally going sideways on the daily time frame. So there's not a lot to show you. Upside target 5,900, want to hold 5,650, and let's see what happens. Remember, October 2nd, can't stress it enough. Let's see what happens. All right, so again, eclipse cycles on the NASDAQ, same thing. Lunar eclipse gave you the base, massive rally. Total solar eclipse gave you the nice retracement, bounced up. Our ABC pattern was at 20,623. We got all the way up to 21K. Lots of resistance. Let's look at the NASDAQ here on the daily. NASDAQ on a daily, you got to keep above this midpoint of 20,025. You're at 20,075. Reason being, this can be bullish if you can take out the midpoint and accelerate to the upside. Again, I know a lot of you think NASDAQ makes a lower high, and you guys may end up being right. I've been predicting it will make a new all-time high, just like the S&P in the GFC cycle. The S&P's already made a new all-time high. NASDAQ is still below, hung up at the 786 at 20,206. Want to watch that level, 20,569. And then, of course, taking out your all-time high, 21,000, basically. Where are you in trouble if you start falling down? Watch the 50 here. Watch the 50 at 19.3. You start getting back below that. If you test that as resistance, then again, this thing could be falling apart, okay? And October 2nd is coming up. We'll see if the NASDAQ wants to keep running a few weeks longer, if the S&P does indeed top. We look at the DAX, again, same concept, ABC pattern from the pandemic low. 20,160 is where you're at. DAX at 19,047. Look at this. This is either a massive accumulation pattern here, zoomed out like this, or it's a massive, just like this, a massive distribution pattern for the breakdown, right? It's going to go up or it's going to go down. Look, everything is going to collapse once everything tops. But in the interim here, in this small bullish window that we had of a few weeks after the rate cut, I expect the DAX to track to the markets. And that's exactly what it's doing. It's back at its all-time highs. It made a new all-time high with the rate cut, okay? It made a new all-time high with the rate cut. Even though it's the German market tracking to the U.S. markets, you can see this big bearish candle you got. You're at 19,046 right now. So your interim levels here to watch, doing it like this. You got to break out above this candle high here, which was your new all-time high that you made right here, and then you sold off 19,134. If you get above that, 19.5, and then look at that Fibonacci 1618 lined up beautifully with the ABC from the pandemic low, 20,200. Those are the upside targets if everything just starts accelerating this week to the upside, okay? If it pulls down, you want to hold your support level. Your key support down here is 18,290 because you're going to form a massive double top if you break that level. So we'll move forward. So look at Bitcoin. Bitcoin on the weekly time frame came right back up to the highs. It's a nice move off that 52K low, right? You're back up above 63K. So it's a nice move up. But again, you're just keeping in tracks so far with this descending channel, right? This is all that you've done is tracked with this descending channel. You need that catalyst. I think you got to see the NASDAQ break out for the catalyst to the upside. And the NASDAQ is not breaking out yet, right? It still hasn't made a new all-time high. So you have Bitcoin retesting this local high here, right close to that 65. It needs to get above the 65, get in this level, take out 70K, and then I think it's going to be stuck in this level somewhere up here, depending what the NASDAQ does, because this is your same topping level from all these tops, guys. The low 70s, right? Low to the mid 70s right in here, but it needs to take out that first level of 65K. Again, if we do this with fibs from the all-time high down to that retracement level low, you're hung up at the 618, 64,327. That's where you're getting rejected right now. Look at the money flow here. You're in bullish territory, not overbought, but you're just reflecting what's happening in the NASDAQ. NASDAQ's not moving up. Bitcoin's kind of stuck as well. Need a catalyst, right? What will that catalyst be? I don't know. We shall see. But let's look at Tesla. This was a comment request in the YouTube comments. And yes, I do read them all and reply to everybody. A couple of ways I track Tesla. Tesla's on a nice move. First, I look at my local high right here, okay, which is just for dates. If you can't see that, Thursday, July 11th. Pull it down to that retracement low. You're coming right up to 250. Obviously, it's a psychological level too. 786 is at 251, 252. Actually, you're at 248.84. So you want to watch that level. And then if you can take out this 271 level, you definitely can have some more upside. 295, which let's just call it 300, and then 330. Okay, but that's Tesla if it wants to cook and keep moving up. We have to see if it's going to do that. Nice bullish MFI. You want to see if this keeps moving up. Momentum is turning bullish. Those are the key levels I would watch, guys. Watch 250, see how you behave. Just above it's 260, but really the level that you need to break out to get some stronger upside. And this would happen in confluence with the NASDAQ especially, and the S&P do continue to move up, right? Watch Tesla take out 271 because then you're looking at 300 on Tesla would be a nice earmark for it. What levels you want to hold on the lows? Well, you want to hold these fractal lows, $200. You need to hold $200, which is right here. Okay. If this starts breaking down here and comes back down, you want to keep above that 200. Try to give yourself a chance to rebound. All right, guys. Hope you enjoyed the video. Be sure to like and subscribe. I forgot to say that. And I'll catch you guys on the next one. Enjoy your week, everybody.